What's up, spiritualites? It's your boy Crypto Spiritual out here. Welcome back to another video. As promised, in this one I will show you the new strategy I've been working on in the background. But first, I'd like to talk about my old strategy and the back testing results I got from that, and why I'm deciding to shift gears. Next, I will break down my strategy, what I'm using, what I'm doing. I'll show you a little bit of my backtesting workflow, how I go from an empty chart to get into a trade. And I'll run through a few trades of backtesting and show you how it works. Then I'll talk more about the emotional side and how it has kind of shifted my confidence in my emotional trading moving forward. At the end, I'll explain some of the next steps and things that I want to develop more about this strategy, and we'll wrap it up. With that being said, let's jump on in. So, you're probably wondering, wow, you put a 34-minute video out of how to break down your strategy. Why would you want to switch it up now? And the answer is simple. Well, actually the opposite of that. Something that I wanted to be very simple, very intuitive, turned out to be something very complicated and muddy and subjective. I was noticing a lot of bad habits that had happened in the past, where I was over trading, wasn't feeling confident in trades, had something that I had built, such as the spreadsheet, but didn't feel confident in using it. So as I started to notice some of these same patterns popping up into my trading, I started to realize, hey, maybe I've done this wrong, or maybe I didn't start wrong, but somewhere along the way I went wrong. Then I watched a video from one of my favorite content creators that I follow, and he showed a strategy that he's been using, and I've seen it before. I've seen him use it before, but it was my first time really giving it a shot and putting my own spin on it. See, he's a really good trader, so I thought if I didn't follow it exactly how he did it, then it wouldn't work for me. But it's quite the contrary. If I did it the way that fit for me, it would work, right? And so I just put a couple trades on the chart and was dry testing it really. It wasn't logging anything, wasn't really doing much seriously with it. But it just kept popping up with a few wins here and there. Wins, sprinkled in here and there. And it started to win even more than my strategy. And so at this point, let's backpedal and let's take a look at some of the back testing that I did on my strategy. Now, this is purely my strategy. This is not the new one at all. So I've taken 54 trades. I've got a win rate of about 32%. My average score is about a 75, and it's only getting better. Right, and then my average multiple is 0.35. So every trade that I take, it's like I'm going to win 0.35%, and I can take that. That's not bad for me. So in this case, when I'm looking at it over these 55 trades, if I sum them all together, I'm up almost 20% with this backtesting strategy. Now that's 55 trades, and who knows how long it'll take me to take actually live 54 trades. Who knows how long that would take, but I know once I get there, it should be about 20%. Now the way I've been going, it's might be a little bit less, but I can see over time that the strategy does work. But again, it being so subjective and trying to pick out what the RSI means this time and what the zero means this time, and not having it just simple, plain across all categories, really started to make me feel uneasy taking trades. And so that leads me to the new strategy. This new strategy is based on structure, trends, and Fibonacci. Maybe some key levels here and there. It's very simple. All I do is I follow the trend and I wait for it to break. Once the trend breaks, I look for a change of character and structure. That lets me know that price is about to reverse. If the trade that I want to take is going with the higher time frame trend, then I put my take profit a little bit past the recent swing low or swing high. If the trade that I want to take is against the trend, then I'll target the 618 retracement level. And that's it. So let's jump onto the chart and I'll show you exactly what I mean. And then we can back test it and see how it works. Oh, another caveat before we get started. This actually works better on Solana than it does for Bitcoin. Okay, so let's jump into it. We'll go ahead and delete all this stuff. Choose a random bar. I want to pick something recent. 2023. Okay. I'll take 2023. What do we have? A Thursday. So what I'll do is I'll move it a couple days ahead because I like to start at the beginning of the week. So now I'm at Sunday night. So I can work with that and we'll just lead it into Monday morning. So if I'm looking at it, I am in an uptrend. Yeah, you can say an uptrend. Looks like I've had a long exhaustive leg though. So where am I counting structure from? Maybe here. And so I have the possibility of retracing all the way down to about $25, below $25. So I want to mark out this level. There are some other key levels that I will be aware of on the way down that I can push here. And that's right before we get to those zones. So if I'm looking for a trade, it's probably going to be a short into some of these zones down here as the long looks like it has exhausted itself. So if I'm looking for a short, I need to wait for the uptrend. The last one was this one here. So I guess I'm looking at a break right now. But of the internal trend here, I would need to see a break through this level. And by then it's kind of late. So if I'm looking more internally, see this trend happened, broke below, and it's now breaking through that level. Yeah, I can take a short from here. Okay, then okay level, right above that high. Okay, let's see what we get. Price is trying to break down. Re-entering that top part of that range though scares me just a bit. But we're getting that fall. And with a fall like this, if it's aggressive, I'm putting my stop at break even just because it can go aggressively right back up where it came from, and I'm not trying to get caught in all that slop. So I got my get paid line here at the 0. And let's see if we can get a continuation through this level. Looks like it will. And there we go. Just like that. You see that breaker trend and works out. So now we're starting to reach the top of these highs here, which price can always bounce to, but we have some zones down here. So I'll just kind of play it by the look of it. Right now, in order to go back up, it's not going to take much, so I'd be a little bit weary, especially because this didn't give me a full 50% retrace. So anything that comes in here, I'm still looking for a short. So let's play it out. Still going down, but there haven't been any true retraces on a... Okay, I think I spoke too soon. Let's try something like that. Just gotta break that inside structure. Not just yet. Alright, here's my structure. Boom, 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 boom. So I need this line to break down here. Nope, didn't get it. But I do know the level that needs to break now. And as we get closer and closer to the 0.5, price may start to be a little bit less favorable in the downward trend, may be more reluctant to go down. Here I've gotten the break that I wanted to see. I've got a little bit of structure on my side. I know I should take it from here. And that 618 is kind of my barrier line. Let's see if I get tagged in. Oh, one of those near. Okay, got me in. Oh, looks like we're gonna, well, there it is. Okay, here, when you see this big wick and it's coming down here, these are the games I do not play. I don't want to be in when it's wicking and doing all these crazy things like that. I'd much rather just go ahead and take my profit or take my break even before I deal with those wicks. So as of right now, my stop loss is now at break even. Yes, price can still go back up there, but those wicks I don't play with them. And as you can see, if it's going to go in your direction, it's going to go in your direction. So here's another one that ideally would have won, right? And now is the point where I start looking for longs. We are in an uptrend. Let's not forget that. It's the main thing. We're in an uptrend. Price has been going up. These are the levels we have. All right, I'm looking for longs now. So let's play it out and look for those downtrends that I can actually follow. Not something super steep. Okay, I've got this one here. Price is tightening up. Looking like it might be able to break through here. If it does, which it has broken the trend now, I do want to see it make it through this last little lower high before the last low low. If you can't break through there, I'll be forced to look for another short. And right now, this is my uptrend. So whether I break over this line or break below this line will let me know what I should do next. Okay, it's signaling that it wants to break. Again, this is not a full retrace. Definitely didn't make it to a 50% retrace, so this long could be short-lived, but it is also the last point of reversal for our uptrend. So I do believe in it more than maybe another long from the same level. Okay. Ranging like that right on top of my high, I'm not gonna trust that. Be more patient. Okay, here it is. Now I've gotten the break that I want to see. So let's see if we can get in. Need that downtrend to come in. Getting something pretty steep. All right, liking what I see here. To convince me that it would be a downtrend, it would still have to come across this line here. Okay, here we go. This didn't quite break that low, so I do want to see this one get broken before I go ahead and take this long. Always better to be patient. There we go. So on the retrace, come back to that. Yeah, I like this level here. So let's see if I get tagged in. Price aggressively went against me and stopped me out. Okay. So in this case, it gave me a fake break. It did have some space to go, right? It did not do the full retrace, so I should have been weary. Yeah, I was targeting for a little bit higher in that zone. Thought maybe I could get back up to the last support level, but sometimes it doesn't work out like that. And that's why I say when you're trading against a higher time frame trade, then you need to be careful. In this case, I thought we were with the higher time frame trend, but we were with the extra long higher time frame trend. Well, as you can see, you win some and you lose some, but out of 3 trades, I won 2, only lost 1. I know that's a very, very, very small sample size, but it is indicative of the results that I have been getting on this. So while you're only seeing these 3, I have been backtesting this for a few weeks, not real weeks, but backtest weeks, you understand? And it's been giving me very nice results. So I think with this upcoming week, I will start logging them in a new spreadsheet and showing you guys the results as I get them. Okay, I briefly want to touch on some of the things that I want to develop about the strategy. Number 1 is when to accept that structure, right? When to say, okay, this is the long and this is the short. I'm trying to eliminate that subjectivity. So I think the hard rule should be 0.5. I want to also figure out the exact time frame that I want to look at, because as you can see specifically in this example, I've got a downtrend, so I should be looking for shorts, but my overall higher time frame trend is up. So am I looking for longs? Am I looking for shorts? Like, how does that work? I also want to see if I can incorporate some of the RSI and some of the zero into this new strategy, not using them as the indicator per se, but for just extra confluence. So if I'm thinking about taking shorts, has this RSI gone off in a way that helps me determine that? But again, I want it to be, hey, if it's red, then it means go long. If it's green, then it means go short, or however the case may be. So if it gets too complicated with that, I will not incorporate that at all. For right now, I haven't been using it, and it's seeming to work nicely for me. The times that I have tried to incorporate it, I found that the zero, my own indicator, actually works a little bit better than the RSI. So who knows which one I'll keep, if any. And then what I would like to do is start to experiment with larger risk to reward. So if my 2.5, say like in this trade, wasn't enough, how can I figure out how to maximize that trade and get 7% off that trade? How can I learn to maximize this trade up here, right? That I took way up here and get 7% on that trade, right? So I had 2 7% opportunities, but got out at my regular 2.5. So I'll be experimenting with something like that in the future as well. So stay tuned for those results. Okay, and to the next part of how this affects my emotional trading and gets me that confidence that I like to see back, this strategy makes me feel a lot more comfortable. I feel like I'm in my element. I took a very long and expensive course on market structure and liquidity and smart money concepts. And it opened my eyes to a lot of different things that I could look at. The order blocks and other parts of that course I don't use today, but the notes of imbalance or very quick price action that price has to come back to, and some of those concepts really did sit well with me, and they were easy for me to see and point out. And so this is comfortable for me because I can just see trades and see trends and be like, okay, well, I know if this happens, then I'm great. If this happens, then I'm not. It gives me a yes or no, or if this, then this, which has really made me not look at it as a complicated, okay, I got to make sure I have this. I got to put this in the spreadsheet. I got to make sure I have this. And if all these things get together and I have a certain score, then I should, it takes away that. And so it's say, hey, are we in a downtrend? Yes, then take a short. Are you in an uptrend? Yes, then take a long. And pretty much simplifying it to the very basics of trading. And sometimes I miss trades, and sometimes price moves on without me. But if I have the right idea, but I miss the trade, that feels a lot better than having the wrong idea 10 times out of 10 every day of the week. I do think that with this, I might have a little bit of risk of FOMO entering, like, oh, I'm going to miss out, so I need to take a closer entry with a larger stop loss, but I know price is going to go way down. I know some of that happens. A lot of my back testing trades have been break evens, actually, where price has just gone down, but just not quite gotten to my level and just ranged. And then I'd have to say, okay, let me just put it at break even. Price would break against me, and then I'd be out of those trades. So a lot of break evens, not a lot of losses, and about as many wins as I would need to feel comfortable with moving on with this strategy, rather than trying to keep tweaking the one that I have now. So it does make me want to completely jump ship, but for now, like I said, I will be trading both and trying to see if there are some elements of the old that can be mixed in with the new, or if I should just go ahead and completely jump ship for now. For my next steps moving forward, definitely going to continue using this in the background. I may take a trade or two on it in this upcoming week. I might try it out. But for now, I'll still be trading my old strategy because I just have that subtle confidence in it that I know it'll work, even though it's a lot harder to use. And until I'm able to phase it out or even improve on that, I'll still keep going. The trading pairs, I will be opening up to Solana, and I'm going to try to add in what I think might be Cardano. I'm debating whether to do Cardano or XRP right now, so stay tuned for that. Also, this strategy here works much better for those altcoins than it does for Bitcoin, so I'm definitely going to be trying to explore some, maybe even throw some Ethereum in there as well to see how well this works. So stay tuned for the next one, guys. Lots of updates coming out soon. Please keep in mind, this is not financial advice. It is for educational purposes only. Before you begin investing and or trading your hard-earned money, consider consulting a financial advisor. And just remember, this is the journey, not the highlight reel. Trade smart, live free.